You know, when you think about the world's most powerful financial institutions, I'm talking about central banks, you probably imagine them tweaking interest rates or managing currencies, right? But lately, they've been doing something else, something, well, surprising. They've been quietly buying up absolutely massive amounts of gold. So let's dive into this global gold rush and figure out what it means for all of us.
This right here is the central question. It gets to the very heart of a huge shift happening in global finance. And we're not talking about small portfolio adjustments. This is a big, coordinated move by some of the most powerful economic players on the planet. It really makes you wonder, what do they see coming that maybe the rest of us don't?
All right, here's how we're going to break this all down. First, we'll get a handle on the sheer scale of this buying spree. Then, we'll dig into why they're doing it, check out the ripple effects across the globe, talk about the risks, and finally, ask what this whole thing signals for the future.
Okay, so first up, let's get a real sense of the scale here. Because I want to be clear, we are not talking about a few minor tweaks to a spreadsheet. This is a massive, sustained wave of buying from the very institutions that sit at the center of the global economy.
Get this, according to the World Gold Council, central banks added a staggering 1,045 tons of gold to their reserves in 2024. And this isn't just a flash in the pan. It's the third year in a row that buying has blown past the 1,000-ton mark. You see a pattern like that, you know something's going on.
And the momentum? It's not slowing down one bit. In just the first quarter of 2025, they snapped up another 244 tons. That tells you there's a real sense of urgency here. They are continuing to buy, and they're buying aggressively.
All of this buying has caused a historic shift. For the first time, gold has actually leapfrogged the euro to become the second largest reserve asset held by central banks around the world. Now, the US dollar, it's still king of the hill, but seeing gold climb the ranks like this, that's a fundamental change to the way global finance is structured.
And to bring this global trend down to earth, just look at India. The Reserve Bank of India's gold reserves have climbed to around 880 tons. So this isn't just a Western thing. Far from it. Emerging market powers are major players in this gold rush.
So that's the what. Now let's get to the really interesting part, the why. What kind of fears and strategies are driving this unprecedented buying spree? Well, in short, it all comes down to one thing: hedging against a deeply uncertain future.
Now, there isn't just one single reason for this. It's more like a perfect storm of concerns. Central banks are trying to diversify away from the US dollar, shield themselves from geopolitical conflicts and stubborn inflation, and for big emerging powers like India, it's also a way to signal economic strength and self-reliance. It's a total recalibration of their strategy.
This quote just nails it, doesn't it? This isn't about speculation or trying to make a quick buck. It's about insurance. It's about stability. When the people managing the entire global economy are this worried about what's coming, they turn to the oldest, most trusted store of value they know: gold.
Okay, so we know they're buying, and we have a good idea why. But what are the consequences of this massive shift? I mean, what does it actually mean for currencies, for global stability, and for a major economy like India?
Well, think of it like a chain reaction. First, every ounce of gold they buy kind of chips away at the long-held dominance of the US dollar. Second, it's like a giant flashing billboard, signaling that the world's top financial managers are bracing for more inflation and instability. And third, for a country like India, holding more gold is like building a powerful economic shield against those very shocks.
But, and this is a really big but, it's so important to understand that buying gold is not a perfect solution. It's a strategic trade-off, and making this choice comes with its own set of pretty significant risks and downsides.
The trade-off is pretty stark when you look at it. Unlike a government bond, which pays you interest, gold just sits there. It generates zero income. Plus, storing and securing thousands of tons of physical metal, that's incredibly expensive and a huge logistical headache. And while we think of it as a safe haven, its price can still be really volatile. This is the classic opportunity cost. They're choosing perceived safety over a predictable income stream.
So let's pull all these threads together. When you step back and look at this sustained global trend, it becomes pretty clear that this is more than just a financial strategy. It's a powerful signal about the kind of world we're heading into.
At the end of the day, this is so much more than a shift in some dusty old asset allocation plan. We really need to see it for what it is, a warning sign. And it's coming directly from the people who have the clearest view of the entire global economic landscape.
What we're witnessing here is a fundamental, strategic shift.
Central banks are actively preparing their balance sheets for a period of major turbulence. Whether that turbulence comes from geopolitical conflicts or runaway inflation or major currency pressures, they're getting ready for it right now.
And that brings us to the final takeaway for you. Pay attention to what central banks are doing, not just what they're saying in press conferences. Their actions, where they put their money, often reveal what they truly expect for the future. And they frequently see the storm clouds gathering long before the markets do.
So I'll leave you with this question to chew on. In our modern, high-tech, digital economy, does holding on to massive piles of a physical metal still make sense as a core strategy? Or are central banks just clinging to an old playbook because it's what they've always done? Basically, are they stuck in the past? I'd love to know what you think.
You know, when you think about the world's most powerful financial